better than Intel. Christina Partsinevelos, our chip expert, joins us now. You've tried to get us prepared for this over the last couple of days. Christina, what do you make of this?
Well, you did mention there's a top and bottom line beats. We know that. We know also Q1 guidance came in a little bit lower than anticipated at $5.3 billion. So that was the big question mark. What were they going to guide for given all the other chip makers? Now I'm going through the quarterly financial segment summary. And just to Joe's point, he brought up data center segments because that was a big question mark. What we're seeing is that for the quarter, it was $1.7 billion, up 42% year over year, primarily driven by strong sales of their server processors. So that's good news. But then when you look at the other segments like client segment revenue, which encompasses about 20% of AMD's total revenue, that was down 51% year over year due to reduced processor shipments resulting from a weak PC market. Then gaming, we know Steve just talked about that with EA. The gaming segment was down 7% year over year, driven by lower gaming graphics sales. And then we have the embedded segment, also a huge portion of their revenue. That was actually up quite a bit to $1.4 billion, over 1,000% higher year over year. So those are the four important, sorry, I'm hitting my mic, but those are the four important segments that we're seeing. Data center strong, but weakness coming from the client segment revenue as well as gaming.
You know, but the weakness, I think you would agree, is coming from areas that we expected to be weaker.
Exactly.
Right? And the data center is holding up maybe better than some expected. And some of the commentary, at least of which I read coming into this report, was that they've been better able to withstand the data center slowdown than, say, an Intel, because those who were suggesting that say they have just better products. And you alluded to the sales of those products within the data center group.
So to a few points. Well, one, you can argue maybe that they don't necessarily have better products because Intel's going to be launching a new product very soon. So that's possibly part of the reason why Intel's been dropping the prices of many of their products. But yes, there's obviously some customers on both sides. But Intel warned about this. Intel warned about losing market share, not only to AMD, but to ARM as well. And so we're starting to see it. The concerning point that maybe is not in this report, but might be on the call, is the pricing that of some of these products. Have the prices dropped just to maintain this competition between both companies at a time when sales are a little bit weaker? Hopefully that won't be the case. But overall, it seems like a pretty good report with weaker Q1 revenue guidance.
I'm glad you bring that point up. It's a good one, too, the pricing, because I know that Stacy Rascon, for example, who's going to join us, momentarily as well to give his first read, has been worried about pricing drops there, too. So, Christina, thank you. We'll talk to you again soon. And don't miss, by the way, tomorrow, Lisa Su, Dr. Lisa Su on Squawk on the Street in the morning is going to talk to these results and, what her outlook is going ahead. Let me come back to you. I wonder how you feel about this move in the market within the chip space. Some have suggested, well, it's confirming the overall move in the market. Others say it's just a head fake and a snapback like we've seen in so many other areas of NASDAQ-related stocks.
Sure, Scott. Thanks. Similar to what Joe was talking about before, in terms of the high beta trade working so far in January, the chips have definitely participated with that. At least most of them have. As you mentioned, Intel continues to have its woes, losing market share to AMD and others. And, you could see it. AMD, when they did the Xilinx acquisition, they gained a good product platform so that they're able to customize workloads better for their customers. And so, I think they will continue to gain share, and that's going to allow them to sort of continue to grow revenues to a certain extent relative to others, even as the economy slows down. And so, when we look at quality and sales momentum, at least, we think about those areas that, on a relative basis can outperform others within the space. And so, I think it's still, from a valuation perspective, a little lofty, but, I think you pay for sort of quality and leaders within certain areas of the market.